when I look out my window.
Hello traders, Gary Wagner with the Gold Forecast here. Approximately 1 o'clock in Honolulu, Hawaii on Sunday, which means markets have been open for approximately 1 hour. Monday morning on Australia, it is the 22nd day of May, and this is the Daily Report. We do have gold trading higher this morning, trading between $3 and $4, currently higher. As you can see, we are looking at a 2-minute chart. So when we talk about the market being between $3 and $4 higher, you can see the range that it has been trading in from the high to the low. We started our trading day right in this area. So the market, in fact, did open lower this morning, opening down about $2 to $3. That was right in this area. It did come up. It made a high just at about 15.19, corrected from there, and now we are trading at around 15.14.45 per ounce. Of course, traders, it is personally my belief at this point that we have witnessed the conclusion of our corrective wave number 4. We are looking at one of our master charts. This master chart, of course, has our Elliott wave count. It has channel lines, and I have included today the moving average convergence divergence, the MACD as I like to call it. The interesting thing, and the reason for me bringing that up, is you can see that we have gotten, as this market came down, we have gotten our cross. And that, to me, of course, is signaling that we have our confirmation that we are now over our correction and heading into our final impulse wave. Now, the impulse wave in terms of our count is that we are currently in a major fifth wave. Now, we've been in this major fifth wave for quite some time. This is our major count. These blue boxes are our intermediate. So when we look at our intermediate count, here is 2 to 3, and then this is the conclusion of wave 4, and then as I said, we're currently in wave 5. That's within our intermediate count. Within that intermediate count, of course, is going to be what's called our minor count, and the minor count is what we will be looking at over the next couple of weeks, because it is that minor count that I believe is going to be a complex wave, which rather than taking us to a new high like that, will take us to a new high with a series of impulse and corrective waves within it. In other words, a full 5 count. What I mean by that is I would expect to see wave 1 in the minor count. That's where we are now. Correction, wave 3, correction 4, and then 5. And then that would conclude this minor count right in here, which would conclude the intermediate and the major count, because we are in a 5 and a 5, both in major and intermediate. So this, to me, is going to be what I'll call the last hurrah, meaning the last of this major impulse cycle, because once we conclude with 5, and that's going to be some time though, but once we conclude with 5, we will go into a corrective phase. The corrective phase will then take us through a real correction, and I believe at that point, because we are in a longer term bull cycle, we'll go back and start this count all over again. When we take a look at this marketplace in terms of how this last correction played out, as you can see, I was kind of torn between whether it was going to be a classic ABC, although I believed it was going to be a flat or a truncated A, B, and then C. And the other thing that I was torn about was whether it was going to play out like that or play out as what I call a classic triangle. I have at this point labeled it a hybrid. In other words, because we had this kind of stretch component in here, my belief is that it played out a little bit like both corrections could play out. And to me, it's not so much significant as to how we label this past correction. I think what is significant is that we weathered this correction. We've positioned ourselves nicely. Traders were long 1488. We've got a lower stop in place, and it absolutely appears at this point that we can see that this market is truly broken out to the upside and concluded the correction. Now, as you can see, this is the chart that I was working on. It is a 628-minute chart, and this is when we were under the assumption that it would be a straight pennant formation. you can see that it didn't quite work out that way, and that's why I'm really looking at this as a hybrid. We absolutely had, in terms of 5 legs, 1, 2, 3. Our fourth broke a little bit above it, but we never really got that fifth. You can see that it kind of consolidated here, and then we got our breakout to the upside. And that's why I'm kind of labeling it a hybrid. As I said, to me, it's not really critically important in terms of having nailed the type of correction. Rather, what is critically important is that we were looking for a truncated or flat correction, meaning that we would find in this correction the first wave down, this first wave, to absolutely be the low during that correction. Because as you know, on a traditional correction, you will get an A, you will get your B, which fell right in place just above 50%, but a standard correction, you will get a low that goes below the low that was made in A. My sentiment was, because we had such a harsh correction right here on our first leg, so to speak, when I was looking at this as a straight pennant or triangle, that my belief was we would get a series of higher lows. And in fact, we did get that, but it didn't pan out, as you can see, exactly as a textbook. It rarely does. But I do believe that the most important factor is that the correction itself is over. We are back in an impulse wave, and we should see this market begin to trade higher. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.
Many sights to see, and when I look in my window, so many different people to be, that it's strange